Top 10 reasons why Cathie Wood thinks Tesla is a good investment. Ark Investment Management is an American firm based in Florida which manages investments from some of the biggest investors in the world. Founded in 2014 by Cathie Wood, the company currently has $50 billion in assets under management. Cathie is entirely invested, no pun intended, in the investment circle, and she has insight into every potential investment, which brings in large profits for her firm. Cathie has her eyes set on Tesla as an investment because she thinks it's an investment for the future. She's justified Tesla's position as a brilliant investment option even though it might not be at its best. Here are the top 10 reasons why Cathie Wood thinks Tesla can be a good investment. But before we move on, make sure to subscribe to the channel and press the bell icon so you never miss any videos from us. Let's begin. Number 10. Believes in its future potential. According to Cathie Wood and her colleagues at Ark Invest, suppose Elon Musk's electric vehicle manufacturer was to create a product that could sell for half the price of its current products. In that case, it could be tenfold the size of its whole addressable market. According to Ark Invest, automobiles priced above $60,000 only serve around 5% of the US automotive industry. The market also grows to about 50% when a vehicle's price falls below $30,000. Therefore, Tesla's addressable market would dramatically expand if it introduced a less expensive car than the Model 3 and Model Y. Ark Invest stated, "In our view, fears of declining demand for Tesla vehicles are misplaced. If anything, Tesla is supply constrained at current price points, and a $30,000 vehicle could expand demand tenfold. We will not be surprised if Tesla's next-generation vehicle is the Cyber Robotaxi." Wood, who's been a long-time bull on TSLA, also added 10,821 shares of the EV giant to the Ark Autonomous Technology and Robotics ETF only a few months ago. For RQ, Tesla represents the top holding, with a weighting in the fund of 10.12%. Number 9. Solution to the economy's problem. Cathie also says that Tesla is a solution to the current turmoil in the economy. "We think with supply chain issues and with the food and energy crisis that once again, innovation is going to help solve these problems," said Wood during an exclusive interview with Yahoo Finance Live. "There's been an accelerated consumer preference towards electric vehicles like Tesla because of oil prices, and we think there's no stopping that trend now," she said. All stocks are experiencing difficulty in this environment as the market tries to understand how far the Fed is going to go and how deep this recession is going to be, said Wood. "That's real demand destruction," she said. "It couldn't have happened without electric vehicles at the margin taking a huge share from traditional automobiles." Analysts at Ark have said that gas-powered vehicles will be entirely obsolete within the next 5 to 10 years. Number 8. Believes it can quadruple. According to the Investor in Innovation, Tesla shares might increase by 356% from current values by 2026, more than quadrupling to $4,600 per share. Before this, Ark predicted that the value of Tesla shares would reach $3,000 by 2025. According to Ark's best-case scenario, that network could provide Tesla with $486 billion yearly income by 2026. In its worst-case scenario, Ark projects that Tesla's network of robot taxis would bring in $51 billion annually. Tesla's sales of electric automobiles were the primary source of its roughly $54 billion in revenue in 2021. "We now expect more demand for autonomous ride-hail at higher price points than we had modeled originally," Ark Invest explained. Number 7. Invested heavily only recently. In mid-December, as the market continued its recent losses and as word spread that Elon Musk had sold $3.6 billion worth of shares over 3 days, Cathie Wood's Ark Invest pounced on over $12 million worth of Tesla stock. On Wednesday, Ark bought 74,862 shares across 3 accounts. The company paid $156.80 per share, which was the least since 2012. Ark executed the acquisition through Ark Innovation ETF, Ark Autonomous Tech and Robotics ETF, and Ark Next Generation Internet ETF. Elon Musk, the CEO of Tesla, reportedly sold over 22 million shares during a 3-day period that ended on December 14th. For focusing too much of his attention away from his main electric car manufacturer and onto Twitter, which he acquired in October, Musk has come under fire from investors. In 2022, Tesla stock went down roughly 55%. But Wood is still unwaveringly optimistic about Musk and his plan, and she said that she thinks he is committed to giving Tesla cars complete autonomy by 2024. Number 6. Low-cost marketing. For better or worse, Tesla is prone to garnering media attention. The media covers every step Tesla takes in great detail, giving the firm an incredible amount of free promotion. A cult-like following and more than 124.4 million Twitter followers for CEO Elon Musk also helps. Due to all this attention, the business finds it quite simple to swiftly spread the news when new products are available and generate enormous demand for its goods. Witness the 400,000 pre-orders for the Model 3. That is exceptional for a business that spent less than $50 million on marketing, promotions, and advertising charges the previous year. Wood believes that with all the costs saved on marketing, the company invested into its products and logistics, which is quite impressive. Number 5. Loyal consumer base. Consider a recent Consumer Reports poll, which placed Tesla at the top of all automakers for owner satisfaction. According to CR statistics, 91% of Tesla owners polled stated they would repurchase the same car if they could. That outcome outperformed its nearest rival by 7 percentage points. The company's Net Promoter Score is another option. With a Net Promoter Score of 96, Tesla ranks number 1 among car brands on IndexNPS.com. This figure reflects the frequency with which consumers would suggest a certain brand to others, is excellent in absolute terms, and places 12 points ahead of the nearest rival. These are more than just facts and figures that Wood has paid attention to. Having developed such a loyal fan base over the years, there's little chance that these customers will choose another automobile manufacturer. Tesla's electric movement is executed far better than any other car manufacturer. Number 4. The electric movement. The worry of running out of power and becoming stranded is a common argument against electric vehicles made by detractors. Tesla is well aware of this issue and has decided to build its network of rapid charging stations to address it. Tesla's global network already includes over 40,000 superchargers, but the firm has revealed its intention to boost that total in the ensuing years. Additionally, the business intends to build up more significant sites along its busiest travel routes and electrify more than 15,000 of its destination charging connections by the end of the year. Cathie believes that as long as the company can put up with the customer's demand, there's no doubt that one should purchase a Tesla vehicle. It's an absolute no-brainer, without a doubt. Number 3. New revenue sources. While the firm should be commended for its comeback, many stockholders are focused on potential new areas for disruption. Tesla currently has a market value of $777 billion, thanks to Cathie Wood's Ark Invest and the stock's inclusion in many of Ark's well-known exchange-traded funds. Except for Toyota Motors, TM minus 1.22%. No other automaker has more than that. Additionally, Toyota sold nearly 3 times as many cars in the first half of this year. A different indicator shows the premium Tesla is receiving. It is presently trading for 73 times its gross profit over the previous 12 months. 22 is what Toyota uses. Tesla is undoubtedly expanding much more quickly. It then becomes a matter of determining how much of a premium it merits. Number 2. Immense profitability. Famous investor Jim Channel stated in 2017 that he believed Tesla's stock was worthless. Despite how absurd the prediction now appears, Tesla CEO Elon Musk had acknowledged that the business was about a month away from going out of business when it was made. That era has long since passed. With gross margins that are the best in the industry, the company is now firmly profitable. The percentage spent on selling, overhead, and R&D has been more than slashed in half, while revenue has increased by 256% since 2017. The business has turned from being on the verge of failure to becoming a self-sufficient cash flow powerhouse. There could yet be a ton more to come. Number 1. A committed leader. The final reason Wood believes in Tesla is that the leadership is fully committed to making it the best automobile manufacturer in the world. Musk himself owns millions of Tesla stock, and as the years progress, he's financially motivated to make Tesla succeed even more. Another executive that deserves a lot of credit for turning Tesla into a success is J.B. Straubel. JB is a brilliant engineer who's worked at the company since day one and is currently its advisor. If you need more evidence, look at the firm's share price. Because Elon and JB have a proven track record of making the correct decisions at Tesla, Wood feels comfortable investing alongside these two geniuses. So that's it for today. We hope you liked the video. What are your opinions regarding Tesla? Have you bought any stock? Let us know in the comment section. See you in the next video.